Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
At the Coastal Financial Planning Group, we believe that having a defined process for making financial decisions is one of the keys to success. That's why we created the three-step review process that's designed to help you review and create your personalized financial strategy. It's designed for your peace of mind in retirement. You probably know that having a solid financial plan is critical for retirement, but how do you know if you have all the pieces put together properly? Our three-step review process helps you identify the risks, issues, and opportunities in your plan so that you don't let any of your life savings slip through the cracks. In this episode today, I'll go over the three-step review process in detail. History has shown us that when investors make decisions based on emotions rather than facts and logic, they more than likely lose significantly and lock in their losses for the long term. As part of the three-step review process, we'll help you create your own financial decision-making process that's built around your needs and goals. Whether you're looking to buy or sell a house, reduce your taxes, or safeguard your investments in retirement, our three-step retirement review process is designed to help you make the best decisions for yourself. This retirement planning video is meant to be shared with anyone you might find it helpful. If you think that your retirement-minded friends or family might be interested in watching this video, feel free to share it with them. Don't forget to copy or write down the link to this video and send it to them. There are several links below in the show notes section with valuable information you can use for your retirement planning journey. So, are you ready to learn more about the three-step review retirement process and how it could benefit you in retirement? Let's get started. First step of the three-step review process is taxes. We review your current tax situation. Now, what are we looking for there? We're looking for areas where money could possibly be slipping through the cracks. Now, over a 20 to 30 year span of retirement, that could add up to significant dollars. Let's say that you're letting $500 or $1,000 a year slip through the cracks to the IRS. Wouldn't you want to safeguard that money so it wouldn't go to the IRS and you could spend it in retirement? That could be significant savings at $20,000 to $30,000 over a 20, 30 year span of retirement. We also identify things like phantom income and incorrect uses of taxable and tax deferred strategies. We uncover any missed opportunities for offsetting gains with losses. So tax loss harvesting, that's called. These are tax forward planning methods that oftentimes we find when a client comes in, they're not having their current source of financial information in the tax area give them those type of pointers. So we want to look at tax forward planning opportunities and where we can avoid money slipping through the cracks to the IRS in step one with taxes. Step two is a detailed income analysis. Many of our prospective clients and our clients have gone through the process at the Coastal Financial Planning Group of the three-step review, and we've developed a detailed written retirement income plan for them where it will spell out how much we have in revenue coming in, what are our expenses going out. We'll project that out for the rest of your life. We'll add in inflation and taxes and all the risks and issues that could possibly affect you during your retirement lifespan. And we'll address each one of those to make sure your income plan looks sound all the way out till age 100. And you might be saying, age 100, I'm not going that far. Well, more and more people are. So we'd rather plan, because most people's biggest fear is that they run out of money in retirement. We'll plan out to age 100. And if you don't make it quite that far, there might be a little bit left over for your beneficiaries. But in this detailed income analysis, we're going to review the current and future income sources you'll have. We're going to protect your future income from inflation. And then we're also going to look at what your personal inflation rate is based on breaking down your expenses into the different expense categories, because we know different things are going to cost more or less in retirement. So we want to make adjustments with that income plan each year when we sit down for our annual review with our clients. Step 3 of the 3-step review is investment risk review. Now, there are many more risks that we need to plan for in retirement, but where we see the biggest mistakes are in the area of investment planning. We want to identify and understand what your risk tolerance for investing is. We also want to understand that there's different times and needs that you'll have different uses for your investments throughout retirement to provide the income that you need. So we'll need to understand what risks needs to be assessed on those different buckets or different time zones that you'll be using that money. In other words, we could put some assets at a little bit higher risk that we're going to be used latest or perhaps never in your retirement income plan. And those could get bigger returns because we take more risk and maybe have that in the stock market. So understanding how your risk exposure is going to fit into this 3-step review process is critical, and how it could affect your goals is even more important. Now, the final point that we talk about when we look at investment risk and review is we want to balance your portfolio to match your risk tolerance. And what we do to detail that is we look at an income allocation plan. So an income allocation plan will provide you with the income that you need to supplement your Social Security, if you have any pension checks, any forms of that, pretty much guaranteed income that you're going to have. What do we need to supplement that to meet your expenses in retirement? So how do we fill those gaps? Make sure that all of your income is guaranteed for the rest of your lives, you and your spouse. And then whatever's left over, we invest at whatever risk that you want, as I discussed before when we do your risk tolerance review for your investments. So these are many critical steps that must be implemented, and certainly are an important part of your discovery process as you detail out your retirement income plan and your goals for your retirement years and beyond. So discover what it means to have clarity, confidence, and peace of mind as you're planning for retirement. Call us today for a free, no obligation 3-step review. Call 843-735-5065, and we look forward to having you back on another edition of Navigating Retirement.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as
third-party rankings and recognition from rated services or publications do not guarantee future investment success. Working with a highly rated advisor also does not ensure that a client or prospect will experience a high fiduciary duty. These ratings should not be viewed as an endorsement of the advisor by any client who do not represent any insurance or related. Generally, ratings, rankings, and recognition are based on information provided by the advisor. Please contact the advisor for more information regarding rating compensation.